Today, we're talking about a massive shift. Banks have just been given a green light on crypto, and if you're not positioned for XRP, you might regret it. Here's the reality. When banks start integrating crypto services, it's usually a signal that real adoption and capital flows are moving quickly, and XRP is uniquely positioned to benefit. If you want deep XRP insights before the mainstream catches on, hit subscribe now. I break down moves that most traders overlook. Let's break this down. Recently, regulators gave banks clear approval to offer crypto services, custody, trading, and integration into payment systems. This isn't just about Bitcoin or Ethereum. It opens the door for institutional money to flow into real utility cryptocurrencies like XRP. XRP's speed and low cost make it attractive for banks and cross-border payments, and this shift could accelerate adoption faster than many expect. Why does this matter for XRP holders? Institutional adoption isn't just hype, it translates to real capital flows. When banks get comfortable with crypto infrastructure, they need assets that are fast, liquid, and scalable. XRP fits the bill. Banks and payment providers are increasingly looking for solutions that settle quickly with low fees, and XRP already does that. Here's what most people are missing. This isn't just a tech shift, it's a structural change in how capital moves. When banks start offering crypto services, that's not retail FOMO, that's institutional trust. And institutional trust is a major price driver, especially when it's paired with real world use cases. So, what could this mean for XRP? In the short term, XRP could see increased volume and liquidity. Longer term, if banks start using RippleNet or other XRP-friendly rails, demand could increase while circulating supply tightens as usage grows. Supply dynamics matter, and that's something manual casual holders overlook. Many people look at XRP's 100 billion total supply and assume that means unlimited XRP available, but that's a misconception. The crucial distinction is circulating supply versus total supply. Not all XRP is accessible or actively traded. Over time, as real world systems adopt XRP for its intended purpose, cross border settlement and bank liquidity, circulating supply can tighten quietly. When supply tightens and demand increases, price mechanisms change fundamentally. That's where real repricing happens, not just for retail hype. A few structural elements validate why banks might turn to assets like XRP. Speed, transactions settle in seconds. Cost, ultra low fees compared to legacy systems. And liquidity, Ripple's global payment infrastructure. However, it's important to acknowledge risk too. Regulatory clarity, banking integrations hurdles, and macro volatility can all impact timing. According to analysts and blockchain data watchers, institutional positioning tends to happen before the general market notices. We've already seen increased interest from fintech integrators, custodians, and payment providers exploring XRP rails. When banks get the official green light from regulators, it often accelerates this behavior, seen historically in Bitcoin ETF rollouts and institutional custody adoption. Let's talk about you. Are you repositioning for this shift? Do you think XRP's utility will make it a top choice for bank crypto integration? Drop your thoughts in the comments. I read them all. If you want daily, thought-driven XRP updates and market breakdowns you can't find anywhere else, hit subscribe and turn on notifications. Stay sharp. Real adoption isn't waiting for anyone.